Revenue, explained simply, is the money a company generates from its business activities during a particular period of time. There are many different variations of this term. Revenue, sales, or in Europe, it's often referred to as turnover. You'll see it on a financial statement in many different variations. Total revenue, net revenue, or just revenue. Total sales, net sales, or just sales. Or sometimes we just refer to it as the top line because it's normally at the top line of an income statement. Fundamentally, revenue is reflective of the transactions that have occurred during a particular period of time between the company and its customers. It's typically reported in months, quarters, or years, but companies may measure it in days, even hours in some cases. Now, notice I said transactions and not actual cash received. This is an important point to distinguish. Revenue is reflective of when a company recognizes a transaction that has occurred between the company and the customer. In the case of a retailer, it's a pretty simple concept. When you buy a product, the company recognizes that transaction as revenue or a sale, and if you paid in cash, they receive the money immediately. But in the case of a business-to-business transaction, it may be more complicated. Imagine your Campbell Soup. They sell a semi-truckload of soup to a grocery store. When they deliver that truckload of soup, Campbell recognizes the revenue because the transaction is completed when the grocery store received the truck. However, the grocery store may not actually pay Campbell Soup until they receive an invoice, send payment, and they might take 60 or even 90 days later to pay. So revenue recognizes when the transaction occurred, not when they received the cash. As a general principle, revenue is recognized when the product or service is delivered. It is an economic measure that is reflective of transactions. Revenue is the lifeblood of a company and is reflective of the value of goods and services sold by a company during a particular period of time. It's also the top of the profit equation, which is revenue minus expenses. So what are ways that you can increase revenue? Think about how you can sell more, whether it be the selling of additional products, or adding services, or finding new customers. Or another way to increase revenue is to sell products and services at a higher price.